Today, I'm going to share with you the part 2 of the accounting cycle. As we discussed in the last video, we identify the transaction of Joji Langa Cleaning Company. After we identify the transaction, we record the transaction in the general journal. And now, after we record the transaction in the general journal, we are going to transfer all the transaction from general journal to general ledger. We are going to summarize it account by account. How many transaction is related to cash? How many transaction is related to accounts receivable? And etc. So this process of transferring the data from general journal to general ledger is called posting. So in posting, we transfer the data from general ledger, general journal to general ledger. Okay, let's start. General ledger is like T. That's why sometimes they call it as T account. So in the upper part, you can see the cash. And in the left side, you can see the debit. And in the right side, you can see the credit side. You can see also the date of the transaction and the balance at the end of the period. We have to transfer transaction per transaction from general journal to general ledger. First, on March 1st transaction, we have an entry of debit cash, debit truck, and credit common stock. So we'll be transferring it to general ledger. Okay, we have to put the debit side of cash 100,000 and then debit side of truck 100,000, 121,000, and credit side of the T account under the name of common stock 221,000. So debit 100,000 for cash, debit 121,000 for truck, and credit 221,000 common stock. So it's balance. Transaction number 2. On March 1st, 2020, we have an entry of cleaning equipment debit and credit accounts payable 30,500. Because we acquired cleaning equipment on credit. So we will transfer this data into the ledger. So we have to debit 30,500 cleaning equipment. Don't forget also to put the date. Next, the third transaction is we have an entry of debit office supplies expense, credit cash 3,500 because we purchase office supplies on cash basis. So office supplies in T account, we have to put the office supplies expense, debit 3,500, and we have to put the cash here. March 1, 2020, we credit the cash 3,500. Now, somehow you understand the concept of ledger. So we summarize all the transaction account per account. Fourth transaction is we have an entry debit fuel and oil, credit cash 100,000. So we'll go to fuel and oil expense account, debit fuel and oil 1,000, and additional credit to cash 1,000 on March 3, 2020. In our transaction number 5, in our entry number 5, we have debited prepaid insurance 3,000, and credit cash 3,000 because we acquired 1-year property insurance for 3,000. So we debit, we have to put in our T account prepaid insurance, debit 3,000, and credit cash 3,000 on March 15, 2020. Entry number 7 in the general journal. We have an entry of debit accounts receivable 25,000, credit cleaning service revenue 25,000, because we billed Ian's Easy Leasing Company for 25,000. So we are going to debit accounts receivable 25,000 in our T account, and then we have to credit cleaning service revenue 25,000, date March 17, 2020. March 31st entry number 8. We credited cash, we debited cash 30,000 and credit cleaning service revenue of 30,000 because we received cash 30,000 from Avid Studio Company for cleaning services performed. So we are going to debit cash here in our T account 30,000 and then credit cleaning service revenue 30,000. Another entry number 9. We paid salaries for March 2020. We debit cash, we debit salaries and wages 25,000 and credit cash 25,000. So we'll transfer it to our T account. Debit salaries and wages. We have to put the salaries and wages 25,000 and then credit cash 25,000. Date is March 31, 2020. Entry number 10. We paid income tax 2,500. So we debited income tax expense 2,500 and credit cash 2,500. So in our T account, we have to make the account of income tax expense, then debit 2,500, and then we are going to credit cash 2,500. The entry number 11. We pay dividends 2,000 to common stockholders. So what is the entry? We debited 2,000, credit cash 2,000. So we'll transfer this transaction to ledger. So dividends T account 2,000 debit and credit 2,000 cash. Now these are all the transactions of Joji Langa Company for the month of March. So as you can see, we already transferred all the transactions from general journal to general ledger. So let's see the balance. For cash, we don't have beginning balance, but we have a debit transaction of 100,000. We debited 100,000 and 30,000, so we have a total debit of 130,000, and we credited 52,000 for the month of March. So we have a total of 52,000 credit. 130,000 less 52,000 is equal to, we have a debit balance of 78,000 pesos. For our accounts receivable, we have only one transaction, so we have a balance of 25,000 pesos as of March 31, 2020. For prepaid insurance, we have one transaction only, and total we have a balance as of March 31, 2020, we have balance of 3,000. For prepaid rent, we have one transaction also. We have a debit balance of 15,000. For cleaning equipment, we have one transaction also last March 1. So we have a balance of 30,500. For truck, we have one transaction, 121,000. So we have a debit balance of 121,000. For accounts payable, we have one transaction last March 1, 2020. So we have one credit balance. We have a credit balance of 30,500. For common stock, we have one transaction, 221,000. So we have a balance of 221,000 pesos credit. For dividends, we have one transaction also. Debit 2,000 last March 31, 2020. For cleaning service revenue, we have two transactions. So 25,000 last March 17, 2020 and 30,000 last March 31, 2020. So the total balance is 55,000 pesos. For salaries and wages, we have one transaction last March 31, 2020, 25,000 pesos. So the balance is 25,000 pesos. For fuel and oil, we have one transaction, 1,000. So we have a debit balance of 1,000. For supplies expense, we have one transaction, 3,500. So we have a balance of 3,500. For income tax expense, we have only one transaction also, 2,500. But in reality, actually, this is not only one transaction, most of the accounts. But for this illustration purposes, I just make it simplified so that to tackle everything and you will understand the concept. Now, we all posted the accounts from general journal to general ledger. So, what will be the next step? The next step is to transfer all the balances into an adjusted trial balance. So in the unadjusted trial balance, we will know if all the amount, all the accounts that we transferred to ledger is correct, or all the debits and credit is equal. As you can see in the trial balance, you have the heading Joji Langa Cleaning Company, the name of the company, unadjusted trial balance. This is the title of the report, and a certain date, which is the end of the month, March 31, 2020. You can see the account number, account title, the debit in the right side column, and credit in the left side column. So let's transfer all the balances of accounts from ledger into an adjusted trial balance. So what is the balance of cash? Let's check the ledger. The balance of cash in the ledger is 78,000. So we'll transfer in the debit side 78,000. Accounts receivable, we have a debit balance in ledger 25,000. So we'll put it in the debit column in the unadjusted trial balance. Prepaid insurance, we have a debit balance of 3,000. For prepaid rent, we have a debit balance of 15,000. For cleaning equipment, we have a debit balance of 30,500. For truck, we have a debit balance of 121,000. Accounts payable, we have a credit balance of 30,500. For common stock, we have a credit balance of 221,000. Dividends, we have a debit balance of 2,000. Cleaning service revenue, we have a credit balance of 55,000. Salaries and wages, we have a debit balance of 25,000. Fuel and oil, 1,000. Supplies expense, 3,500. And income tax expense, 2,500. All in all, we have a total debits of 306,500 and a total credits of 306,500. So at first glance, our trial balance is correct. Now, the fifth step in the accounting cycle is the adjusting entries. So what is the concept behind of this adjusting entries? This adjusting entries is made usually at the end of the accounting period to record all the expenses and income that we were not able to record during the period. And also, if we have some mistakes during the recording of the transaction, so this is the time that we can make the adjusting entries at the end of the period. So I selected already some particular entries that we included in our adjusting entries, and I will explain to you briefly why I put it in the adjusting entries. First adjusting entries is to record the depreciation of our intangible assets. What is an intangible asset? Intangible asset is an asset that can be physically touched. The example of our intangible asset is truck and the cleaning equipment. So we are going to make to solve the depreciation of the truck and cleaning equipment. So let's start with truck. Okay. Our truck has 121,000 cost. And then I estimated that the salvage value of this truck is 1,000. And I estimated also that I'm going to use this truck for 10 years in the business of Joji Langa Cleaning Company. So the concept of this depreciation is we are going to allocate the cost of this truck throughout the useful life of this asset. So this 121,000 we are going to divide, or we are going to allocate the expense for 10 years. So now we are going to get the expenses of the truck for the month of March. Since I estimated that the cost of the truck, the life of the truck is 10 years and we have a salvage value of 1,000, so the depreciable amount of the truck is 121,000 acquisition cost less salvage value 1,000. So the depreciable amount of the truck is 120,000. So we are going to use the basic method in the depreciation is straight line method. We just have to divide the depreciable cost of 120,000 divided by 10, so you will get the annual depreciation cost of the truck, which is 120,000 divided by 10 is equal to 12,000. But we have to get the monthly depreciation. Since the annual depreciation of the truck is 12,000, we have to divide the 12,000 by 12 because 12 months in 1 year. So the monthly depreciation of the truck is 1,000. So also there is some concept in the depreciation aside from allocation of cost. The other concept is like our asset is getting older, so the cost of this asset is getting lower also. So from 121, we estimated that the cost of the truck became lower by 1,000. So we put this 1,000 into expense account called depreciation expense truck 1,000. What is the entry? Debit depreciation expense truck and credit depreciation accumulated depreciation truck 1,000. What is this accumulated depreciation truck dash truck? This is a contra asset account that during the presentation in the financial statement we deduct it to the main asset account called truck. Truck less accumulated depreciation truck will be truck net book value of the truck. Next, we are going to compute the depreciation of cleaning equipment. We have acquisition cost for cleaning equipment 30,500 and a salvage value of 500. I estimated the salvage value or the scrap value of the equipment 500. So the depreciable amount of this cleaning equipment is 30,500 less 500 is 30,000. I also estimated that I'm going to use this cleaning equipment for 5 years. So we are going to use the straight line method. The depreciation expense of Joji Langga Company, annual depreciation expense of Joji Langga Company is 6,000, but we have to get the 1 month depreciation only. So we have to divide it by 12. 6,000 divided by 12 is 500. So the monthly depreciation of Joji Langga Company for its cleaning equipment is 500. Debit depreciation expense cleaning equipment 500 and credit accumulated depreciation equipment 500. Now somehow you understand the concept of depreciation. Another adjusting entry that I made is the amortization. Amortization of our insurance expense and our rent expense. So what is this amortization? Amortization is the allocation of cost of an intangible asset. A while ago, the depreciation is called allocation of cost of tangible asset. But this time, we are going to allocate the cost of the intangible. What is intangible? Assets that we cannot touch. Maybe there is only evidence of papers like that. For example, the patents. This is intangible assets. Copyrights. This is intangible assets. So in our example here, we have a prepaid insurance for 1 year. Prepaid insurance for 1 year. So we are going to amortize because we used already the 1 month of our insurance. So we paid 3,000 pesos for our insurance, but since we used already the one month of it, we have to recognize an insurance expense cost of 250 pesos. 3,000 divided by 12 is equal to 250 pesos. Insurance expense debit 250 and credit prepaid insurance. The next, the last adjusting entry is recognition of rent expense. We are going to amortize the prepaid rent, meaning we have to recognize the rent that we already used up. So we last March 17, I think, I don't know what's the date of the rent. Okay, last March 16, we paid the rent of 15,000. That is for March 1 to March 1, April, May to May 30, 2020. Since it's already March 31, we use after the 1 month. So 15,000 divided by 3 months, we have a monthly rent expense of 5,000. Since we use already the 5,000 for the month of March, we have to recognize the expense. We have to debit insurance expense 5,000 and credit prepaid insurance 5,000. So that's it. In our adjusting entry, you notice that we recognize all the expenses that's supposed to be we have to record in this period. But there's some adjusting entries that we have to recognize the income. But in this case, in this example, we will not recognize income. Like accrued revenues, we have to recognize accrued revenues. For example, you perform services to that particular company at the end of the period, but you did not record. You must record it just to reflect the correct revenues. And also accrued expenses. For example, you use up the services. You use already the cleaning services, or you used already the services of one company, but you did not pay and you were not able to record in your record. in your book. So you have to record the expenses that you incurred, that you used already during that particular period. For unearned revenues also, we have to adjust sometimes because, for example, we paid Joji Cleaning Company is Joji Cleaning Company receive cash in advance for the services that they are going to perform in the future. So we have to record the unearned revenues. But in our adjusting entries, maybe we already performed the service during the period, so we have to review it. Is our unearned revenue already earned? So we have to make adjusting entries. That is the other example. Those are the other examples of adjusting entries. Now we are done with our adjusting entries. Let's proceed to the next step, which is the adjusted trial balance. You will see the difference now between unadjusted trial balance and the adjusted trial balance. In unadjusted trial balance, we did not adjust yet, or we did not finalize yet. We did not review yet, or we did not check yet if we have any error and make adjustments. But here in the adjusted trial balance, we are done with our adjusting entries. We already considered the adjusting entries, so that you can figure out, and it's very easy. It's easy for you to understand. I will show you the worksheet. This worksheet will show you the movement of the figures from unadjusted trial balance. Then it will go to, we will consider the adjusting entries, and then it will become unadjusted trial balance, and then we will just move forward, or we'll just select the account that will become part of the financial statement called income statement, and then those accounts that belong to the balance sheet accounts. So I'll show you this worksheet where we can make the adjusted trial balance very easily. Very easy. Okay, in this worksheet we have a heading, Joji Langa Company, and the title is Worksheet, and for the month ending March 31, 2020. Okay, we have account number, account title, and then after that we have unadjusted trial balance. We discussed a while ago already the unadjusted trial balance, so it's balanced. At first glance it's correct. And then we make the adjusting entries. We will just make it one by one, how to record it in the, how to put the adjusting entries in the adjusting entries column. In our first transaction, we recognize the depreciation of the truck. So we put we made adjusting entries, debit depreciation expense and credit accumulated depreciation truck. So here I put here debit depreciation expense 1,000 and credit depreciation expense, accumulated depreciation expense truck 1,000. So our second adjusting entry is debit depreciation expense cleaning equipment 500 and credit accumulated depreciation expense 500. So we put here debit 500, depreciation expense, and credit accumulated depreciation cleaning equipment 500. And our third entry is debit insurance expense, to recognize the insurance expense, and credit prepaid insurance 250. So we debited here in the adjusting entries column 250 and credit prepaid insurance 250. And our last entry is debit insurance rent expense 5,000 and credit prepaid rent expense 5,000. So here we put debit 5,000 rent expense and credit prepaid rent 5,000. Now we will proceed with the adjusted trial balance column. So the adjusted trial balance column, unadjusted trial balance, and then we have to consider the adjusting entries. So this time we are going to apply the debit and credit rule. So what is the debit and credit rule? Debit plus debit, add. Debit, credit, deduct. Credit, credit, add. And credit, debit, deduct. So for example, you can figure out it here. We will make one by one. Cash, there is no adjustment for cash, so we will just copy the 78,000. For accounts receivable, there is no adjustment, so 25,000 will just copy. So prepaid insurance, we have 3,000 under unadjusted trial balance, debit, and we have a credit also in our adjusting entries. So we have to apply the rules. So we have debit and credit, so we are going to deduct. Debit 3,000 and credit 250. So the difference is 2,750. Which is higher, debit 3,000 or credit 250? Obviously, the higher is 3,000. The debit amount is higher, so we have to put the amount in the debit column. So prepaid rent, we have a debit balance in an adjusted trial balance 15,000 and credit in the adjusting entries 5,000. So we have a net balance of debit of 10,000. Cleaning equipment, we don't have adjusting entry, so debit balance 30,500. Accumulated depreciation cleaning equipment, we have adjusting entry of 500 credit, but we don't have a balance in the unadjusted trial balance, so we just have to copy in the credit side also 500. Truck, we have a debit of 121,000. Accumulated depreciation, we have 100,000 1,000 credit. For common stock, we have 221,000. For dividends, we just have to carry forward 2,000. For cleaning revenue, we have 55,000. For salaries and wages, we have 25,000. Rent expense, we have a debit in adjusting entry column 5,000. Fuel and oil 1,000. Insurance expense 2,000. Supplies expense 3,500. Depreciation expense 500. Depreciation expense track 1,000, and income tax expense. So the total debit is we have 308,000 in the adjusted trial balance, and we have also the same balance in the credit 308,000. So our adjusted trial balance is correct. Now we have also a copy, we have also a column for income statement column. This income statement is a financial statement that will reflect, that includes the revenue and expense. So as of now, we will just copy the account that is related to revenue and also the expense. So let's make one by one. Cash is an asset, so it's not in the income statement. Accounts receivable, asset, not in the income statement. Prepaid insurance, asset. Prepaid rent, asset. Cleaning equipment, asset. Accumulated depreciation, cleaning equipment, contra asset. Truck, asset. Accumulated depreciation, truck, contra asset. Accounts payable, liabilities. Common stock, stockholders equity. Dividend, stockholders equity. So now cleaning service revenue belongs to income statement account. So we have to put in the credit side. We have to copy in the credit side. Salaries and wages, income statement accounts. Again, income statement includes revenue and expense. All expense and income we will put in the income statement. Rent expense, fuel and oil in the income statement. Supplies expense, depreciation expense, cleaning equipment, depreciation expense, truck, income tax expense. Now we have a total debit in income statement of 38,750 and a total credit of 55,000. So there's a difference. How much is the difference? 16,250. As you notice, the revenue of 55,000 is higher than the expense of 38,750. So we have a net income of 16,250. And also we have another column here in the worksheet called balance sheet. Balance sheet is a financial statement that includes the asset, liabilities, and stockholders' equity account. So to summarize, all the expense, all the revenue and expense will go to income statement, but the cash, the asset, liabilities, and stockholders' equity account will go to balance sheet. So we will copy the amount of the asset, liability, and stockholders' equity in adjusted trial balance. 78,000 for cash debit, 25,000 for accounts receivable debit, 2,750 prepaid insurance debit, prepaid rent 10,000, 30,500 cleaning equipment, and accumulated depreciation cleaning equipment 500, truck 121,000, accounts payable 1,000, 30,500 for accumulated depreciation truck 1,000, accounts payable 30,500, and common stock 21,000 in credit side, and another 2,000 for dividends in the debit side. So the total debit in the balance sheet is 269,250, and the total credit is 253,000. Basically, they call it balance sheet because the asset equals liabilities plus stockholders' equity must be balanced. So what is the difference? The difference is related to income. So any income, we will add it in the stockholders' equity under the retained earnings account. So 253,000 plus 16,250 income, we have a total credit as of now in the balance sheet of 269,250, and now it's equal with the total debit 269,250. So it's now balanced. So just to recall with the accounting cycle, we identify the transaction. After that, we record in the general journal. Then we transfer the data from general journal or entry from general journal to general ledger account per account. We summarize and we got the balance of each account. After we got the balance of each account, we transfer to an adjusted trial balance to validate if all the accounts are correct, if all the debits and credits are balanced. Afterwards, we check if there are some transactions that we must record to add we check if there are some income or expense that we must record in that period, or we have some entries that we made mistake during the journalizing the transaction. So we made adjusting entries. Then after we made the adjusting entries, we do the adjusted trial balance. After we made adjusted trial balance, we are very closer to the end of accounting cycle. We are now in the financial statement preparation. So we made the income statement here in the worksheet and balance sheet in the worksheet. So we will make it more formal in a separate statement. Joji Langa Cleaning Company, the heading, the name of the company, income statement, that's the title of the financial statement, for the month ending March 31, 2020. The date is a specific period for the month ending, meaning for the month ending March 31, 2020, meaning it's all transaction for the month of March. So what is the accounts? Cleaning service revenue 55,000 credit. So that is 55,000. We have revenue of 55,000. We have a total expense of for operation of 36,250. So 55,000 revenue less 36,250 expenses. We have a net income before tax of 18,750. So we're going to less the tax of 2,500. We have a net income of 16,250. So what is the importance, or what is the relevance of this income statement? So in this income statement, for example, you are a financial statement user. I am an employee. So I want to know, is the company earning income well, or is the company managing the expenses well? Because here you can see how much revenue earned for the month of March by Joji Langa Company. So you can see, is this company still earning? So is this company still earning? So I can stay here. So I can stay here because my future is still secured. If this company is not earning, so it's time for me to find another job. This is like that. So, and also you can notice that the expenses, how they spend. Are they spending too much in salaries and wages, or are they spending too much in rent expense? So you can see expense account per account, how the company spent. Now let's proceed with our next financial statement called the balance sheet. So as we discussed a while ago, this balance sheet includes the account of assets, liabilities, and stockholders. Okay, what is the heading? Joji Langa Company, Cleaning Company Incorporated. That's the name of company. Balance sheet, the title of the financial statement as of March 31, 2020. That is the date, meaning this is a particular date. Unlike the income statement is a report of a particular period. So it's not accumulated. Like for example, period of 1 month, period of 1 year. So that is income statement. But balance sheet, this is accumulated from very beginning, from the time that the company started its operation. So in asset, we have a total asset of 265,000. We have a total liabilities of 30,500, and we have total stockholders equity of 235,250. So total liabilities and stockholders equity must be equal to the total asset. So total liabilities and stockholders equity is 265,750 is equal to total asset of 265,750. So your balance sheet is balanced. So what is the importance of this balance sheet? This balance sheet will show that very important role. So as for example, I am an employee. I want to see the balance sheet of that company because I want to see if this company still have cash to pay its obligation, to pay its liabilities, or the company has a very big amount of liabilities. So this is the part 2. We have to make a brief summary of what we discussed from our video part 1 to this part 2. First, we identify the transactions of Joji Langa. The transactions like initial investment, acquisition of asset, incurring of expenses, paying for advances like rent, insurance, and receiving revenues. So those are the transactions. Then we record the journal entries That's the time that we discuss what is the debit and credit, what account we're going to use, and we give some background for the account titles. Then we post and we classify it in the ledger. So all the transactions that affects cash, we summarize it in the account and get the balance. Afterwards, we transfer the balances to an adjusted trial balance to check if all the debit and credit is balanced. Now, then number 5 is we make the adjusting entries. Step number 6 is adjusted trial balance. So we made adjusted trial balance. And step number 7 is financial statements. So we tackled already 2 financial statements, which is 2 of the most important financial statement, the income statement and the balance sheet. The last video I'm going to make related to accounting cycle is we're going to discuss the other part of financial statements and closing of our books to start again for another cycle. That's it for today. Thank you and God bless.